Welcome to the Depth Dive. Today, we're digging into some recent commentary from Peter Schiff. He's been talking a lot about a specific week he views as, well, a really pivotal moment for the financial markets.
Yeah, and what's interesting is how he sees the market reactions, particularly the dollar and
Yeah.
interest rates, to those big trade announcements. He argues these weren't surprises, not to him anyway.
Exactly. He sort of framed it as something he's been warning about for a long time, almost like an I told you so moment, maybe.
You could say that. He's definitely connecting these recent events to his broader long-term view on the U.S. and global economy. It's not just a blip for him.
And that whole Liberation Day rhetoric that popped up around the new tariffs, Schiff jumped on that immediately, very critically. That really caught my ear.
Hmm.
So that's kind of our mission today. We want to really understand Peter Schiff's analysis here. What does he think is going on with these trade developments? What are the risks he sees for the U.S., for the world? And what does he think happens next?
Yeah, and it's probably good to state up front, Schiff's views are often pretty different from the mainstream. He has strong opinions.
Definitely contrarian.
Right. So our goal here isn't to endorse, but just to unpack his arguments, understand his reasoning, and look at the data points he uses.
Okay, good plan. So let's start with what he called the surrender. Schiff argues that the market reaction, the bond market tanking, those rumors about advisors quitting basically forced the administration's hand, forced them to pause the reciprocal tariffs.
Right. He sees it as a moment where the market essentially vetoed the policy, or at least forced a pause.
Hmm.
And what's key is how he interprets the narrative afterwards.
The claims of like a strategic win, uniting the world against China.
Exactly. Schiff just dismisses that as, quote, political spin. He says the market action tells the real story, and it wasn't one of strength. He believes it showed the tariffs were kind of an empty threat.
That empty threat idea feels important because didn't Trump initially talk about world leaders like begging for deals?
He did. Schiff highlights that, contrast the initial boasting versus the reality of, the EU hitting back, China hitting back with their own tariffs.
So from Schiff's perspective, it was a strategic misstep that actually weakened the U.S. position.
That's his argument. He thinks it reduced U.S. leverage because now everyone sees how vulnerable the markets might be to this kind of trade action. The threat maybe doesn't seem as potent anymore.
Okay. So moving beyond just that specific incident, Schiff connects this all back to what he sees as the fundamental problem, this U.S. economic imbalance. He's really clear that he doesn't think trade deficits are because other countries are, screwing the U.S.
Right. That's central to his whole framework. He argues the deficits are just a symptom of the U.S. basically living beyond its means.
How so?
Well, too much spending, not enough saving, and relying way too much on borrowing. He thinks that's the real root cause, not unfair trade deals.
He has that analogy, the one about the island, with the 5 Asians and the Americans. Can you walk us through that? It's quite vivid.
Sure. So imagine an island. You've got 5 industrious people, let's say from Asia, who are busy producing goods, building things, saving. And then you have one American whose main role is, well, consuming.
Just buying stuff.
Right. Schiff uses this to argue that while the American spending looks like it drives the island's economy, it's actually totally dependent on the production of the other 5. He says the U.S. role as the world's primary consumer isn't a position of strength. It's actually dependence.
Dependence on others' production and presumably their willingness to lend us the money to keep buying.
Exactly. And he ties this into interest rates, too.
Ah, right. He mentioned artificially low interest rates. How do they fit in?
Well, his view is that keeping interest rates artificially low for so long just made the problem worse. It encouraged more borrowing, more spending, fueled consumption, but didn't really boost domestic production to match.
So it just deepened the reliance on imports.
That's the idea. Made it easier to keep consuming stuff made elsewhere.
Okay, so if that's the underlying imbalance, what are the big risks Schiff sees now, specifically coming out of these recent trade moves? Let's start with the dollar. He seems very concerned about a dollar collapse.
Yeah, he focused heavily on the immediate drop in the U.S. dollar right after those tariff announcements.
Right.
Against the euro, the yen, the Swiss franc. It was pretty significant.
And he doesn't see that as just noise.
No, not at all. He sees it as the beginning of something much bigger. His reasoning is a weaker dollar makes everything imported more expensive for Americans. So it basically acts like another tax, piling on top of any actual tariffs.
Right, so it could exacerbate inflation.
Exactly. And he predicts a much more substantial decline for the dollar down the road.
Okay, what about the bond market? He mentioned the bond market tanking and rising interest rates. Can you unpack that a bit? What does tanking mean in this context for listeners?
Sure. So when Schiff says the bond market was tanking, he means bond prices were falling sharply. When bond prices fall, their yields, the interest rate they effectively pay, go up.
Why would prices fall like that?
Usually it signals fear. Fear about inflation picking up, or maybe concerns about the borrower's ability to repay. In this case, Schiff connects it to the massive amount of U.S. debt.
We need to keep borrowing, right? Refinancing existing debt, funding new deficits.
Exactly. And Schiff points to the, $5 trillion increase in national debt recently? His worry is, if trade relations sour, will countries like China and Japan be as willing to keep lending the U.S. money?
Especially if they think the dollar is going to weaken further.
Precisely. So finding lenders might get harder, or at least more expensive. That spike in yields we saw, that means higher borrowing costs for the government, and eventually that can trickle down to higher rates for everyone.
Which leads to his other concern, stagflation and bankruptcies. He even mentioned a crisis potentially worse than 2008. That sounds alarming.
It is. Stagflation, just to remind folks, is that nasty mix of stagnant economic growth and rising prices, rising inflation. It's tough to deal with.
So what drives that fear for Schiff?
He sees a potential perfect storm. You've got imports getting more expensive because of the dollar and maybe tariffs. You've got interest rates potentially rising because of the bond market trouble.
Squeezing businesses and consumers.
Right. He thinks this could really hurt businesses, especially maybe retailers who rely on imports and might already have thin margins. He worries about a wave of bankruptcies.
And if businesses go bankrupt?
Then the banks holding their loans get hit. Plus, if interest rates rise significantly, the value of long-term bonds and loans already on the bank's books could fall. Schiff points out that the Fed's stress tests haven't really focused on a stagflation scenario, which he thinks is a huge blind spot.
Wow, okay. And all this, he believes, signals kind of the end of an era, the end of cheap stuff and cheap money for Americans.
That's pretty much his conclusion, yeah. As these global imbalances, the U.S. consuming, others producing and lending, start to unwind, he thinks that long period of relatively cheap imported goods and low borrowing costs is likely over.
Okay, let's shift focus slightly. What about the rest of the world? Schiff seems to think the U.S. faces the biggest problems, but he talks about risks globally and also this idea of liberation for other countries.
Yeah, it's an interesting framing. While he definitely sees the potential for ripple effects, a major U.S. crisis would impact everyone, his core idea is that the rest of the world might actually benefit long term.
How so? Liberated from what?
Liberated, in his view, from the burden of having to finance U.S. consumption. Liberated from having to run trade surpluses with the U.S. and then lending that money back. He thinks they can start trading more amongst themselves.
Ah, okay.
Yeah.
And he gives examples like China and Brazil.
Exactly. He paints a picture where, say, China starts buying more soybeans from Brazil instead of the U.S. Then Brazil, with more income, buys more manufactured goods from China. A sort of rerouting of trade flows, less centered on the U.S. consumer.
And he specifically mentioned China strengthening ties with Europe.
Yeah, he sees that as logical. Europe is a huge consumer market. The euro he views as potentially stronger than the dollar long term. He also predicts China will likely start diversifying its massive foreign reserves away from U.S. treasuries and the dollar, maybe into euros, yen, or, gold.
Okay, which brings us to his predictions. What does Schiff think happens next? Let's start with the dollar outlook again.
He's very clear. Continued significant weakness. He's thrown out numbers like the dollar index falling below 90 maybe by year end, and potentially much, much lower over the next few years.
Wow. And gold. You mentioned gold. He's famously bullish there.
Extremely bullish. His big call is that gold will essentially replace the U.S. dollar as the world's primary reserve asset.
Not just a reserve asset, but the main one.
That's his conviction. He argues that's why central banks around the world have been quietly but steadily accumulating physical gold. They're getting ready, in his view.
So if he thinks the dollar is going down and gold is going up, what's his investment advice? Move out of U.S. assets?
Pretty much, yes. He strongly advises shifting capital out of U.S. stocks and bonds and into things like foreign stocks, especially in emerging markets.
Why emerging markets specifically?
Because he thinks they'll benefit from stronger commodity prices, driven partly by the weaker dollar and also by their own growth, like China's demand for raw materials. He's also bullish on commodities themselves.
And gold mining stocks. He seems particularly keen on those.
Yeah, extremely keen. He sees them as massively undervalued right now. His logic is, the price of gold is rising, but mining stocks haven't kept pace yet. If gold keeps going up, their profits could explode.
And he thinks they're underowned.
Right. He notes that the average investor doesn't hold many, if any, gold miners, so there's a lot of potential buying power that could come into the sector if his predictions pan out.
Okay, one last prediction point. Bailouts. If the U.S. did face a sovereign debt crisis, could it be bailed out?
Schiff is highly skeptical. He argues the traditional lenders think China, Japan, might not be willing or able this time around, especially given the trade tensions and their own potential shift away from the dollar.
So what happens? The Fed just prints money.
That's his fear. He thinks that if the Fed steps in as the lender of last resort on a massive scale, it would just lead to hyperinflation, essentially destroying the dollar's value. Not really a bailout in the traditional sense.
Okay, so just to quickly recap the core of Schiff's argument for everyone listening, he believes recent U.S. trade policies have actually weakened America's global economic position.
Right. And he sees major risks ahead. A significantly weaker dollar, rising interest rates, potentially stagflation, maybe even a financial crisis.
While paradoxically, he thinks the rest of the world might actually emerge stronger in the long run, less dependent on the U.S.
Exactly. And it's really crucial to remember how contrarian this is. As Schiff himself likes to point out, many mainstream analysts were apparently surprised by the initial market reactions that he felt were predictable.
Yeah, he mentioned someone like Jim Cramer initially being down on gold and then changing his tune.
Right. It highlights how different Schiff's framework often is from the consensus view.
It certainly gives you food for thought. I mean, what would the long-term implications be if the U.S. dollar actually lost its status as the world's main reserve currency? How would global economic power shift?
Huge questions. Really profound potential changes.
Definitely worth reflecting on, maybe thinking about how that could impact your own, financial plans or investments down the line.
Absolutely. Understanding these different, sometimes challenging perspectives like Schiff's is pretty vital if you're trying to navigate what seems like an increasingly complex global economy.
Totally agree. And if you want to hear more deep dives into complex financial and economic ideas, definitely head over to notyouradvisor.com and subscribe.